Good evening, all. This is Trader72. Welcome back to my second show of the day and to the channel. I hope you are well on this Monday evening. It's been another day of trading, and I'm just giving you a quick update, really, on what's been happening. Not much happening, if I'm honest. It's been pretty much hands off for most stock traders, I think, today. Obviously, I was expecting to go into the red, and it did, but let's see. So today's show is really a recap on what's going on in terms of news, what's been happening as a recap of the day, a quick look at what might be coming up in terms of trading updates, specifically my Adobe, which I will give a full analysis later in the week, and also just a quick look at defensive stocks and where they are in terms of evaluation, which I perceive as overvalued, and we'll give you an idea of a couple of charts of where they are in terms of Walmart, P&G, and Johnson & Johnson, including some of the defense stocks in terms of defense army stocks as well, or supply of weapons. So that's on today's show. So welcome back, as I said. Let's, without further ado, start for the day's news. We all know where we're at the moment. Let's have a quick look at the markets first. Crude oil is still at just under $100 a barrel. Just as a recap, woke up this morning on after the weekend for most of us, and we found that crude oil had gone massively up above $100 a barrel, which I didn't really expect that quickly. But obviously, there was an escalation. Obviously, the son of the Ayatollah Khomeini is being obviously put in place, which was, I think, a bit of a shock to everybody, thinking that he will continue the current old regime. So that was that. Port of Hormuz as well, being attacked by the Iranians and blocking, obviously, some of the oil tankers. So that obviously has spooked the markets, and crude oil went absolutely, and obviously the ongoing conflict, and obviously that took the crude oil well above $100 a barrel. It touched 120 according to my graph this morning. But at this stage, looking at the chart, let's have a quick look at the oil chart, which is obviously at the moment not on the hour. Let's have it on the 1 week. And as you can see there, it hit 120 on my chart this morning briefly, but really 108 was when it was pretty much at the high. It has come back down a little bit. I think some governments have tried to reassure people that there is going to be, there's obviously reserve supply, so slightly less of a panic, but there's still a major production, problem here. Iraq, I think, is down by 70% at the moment, and obviously surrounding countries are slightly struggling. So supply is definitely affected, which obviously does bring the share price of crude oil and WTI, which is American oil, up as well, which was actually up 17% this morning when I woke up. So, so it's basically, obviously, it's what it has done is obviously given fear around the world of inflation, which we already have quite a bit of a sticky inflation, and that will obviously double up on it. So I think that's one of the reasons why the markets are spooking out slightly at the moment, or the world as a whole is slightly on the spook trip. So looking at the US 30 this morning, as of now, live, London time, which is coming up to 7 o'clock now, US 30, which is the equivalent of the S&P 500, is down by about 327 points. The NASDAQ, however, is in the green, and it has held up all day. It's down to, I think, pretty much as one of the companies. At the moment, it seems like microchips, a boost from microchips has helped limit the NASDAQ losses, it says there. But obviously, oil prices have tanked on the other side for the S&P 500. So a little bit of a contradictory kind of situation between the two different indexes. But we are where we are at the moment. So I think the continuation of really will be, the main storyline will obviously be the ongoing conflict, so keep an eye on that for the rest of the week, and obviously crude oil is something to look out for at this stage. In terms of the actual share price, we are looking at various different share prices at the moment. My S&P 500, let's have a quick look at my portfolio at the moment. Currently in the green still slightly, and it is an amazing stock, really. It has held up quite well. First time today that it has actually retreated quite quickly, quite badly, from about 448.49 to about 440 this morning, but it has bounced slightly back off its lows to 442. These are obviously with consumer spending, inflationary issues, and consumer cyclical at the moment, and what's going on with the background of the geopolitical background is obviously affecting credit cards. Mastercard's down and Visa both down, but not by much, only at 312. Luckily enough, I bought at a good price, and this is where the key point of an entry point is at 314. I bought, so that I think I'm quite happy. If I bought 320, I'd be probably a bit more in the red, and probably wait a lot longer to get back in the green profit. Still, we just Kevin and I obviously that if it does go down to 300, I may well buy more. Same with S&P Global. Still tracking all the others. It looks like Microsoft is kind of just above 400. Again, I would probably be looking at buying under 400. I've done my analysis on all of these companies, so I'm pretty sure that I'm ready to jump on if the right opportunity happens. United Healthcare could be a great opportunity as well at 280 there. We know it kind of is at on average around the 290 mark at the moment, so could be there a stock gap where you could be a good entry point. I would again look at 275 to 280 at the moment, and again this is all worked out in terms of support lines and entry point, but all of these, as I said, I've done my analysis in terms of value investing, all undervalued at the moment, so that is why they're on my list, obviously. So moving on to the current situation in terms of future the trading for this week. Adobe is going to be one of my main stocks which I own, which I'm in massively in the red. We all know my history with Adobe, I think, from my previous shows. Please do relate back to that. That will be coming up on Thursday after the bill. So that is going to be quite a crucial in terms of not just the current number, which they tend to beat, but also their forward guidance, which obviously is going to be important to work out where we're going to be at with that. So that will obviously, make or break the stock. I'm hoping that it will go north of, more towards 300 and good solid numbers, but we'll sure see. Ultra Beauty as well, if some of you are holding that stock, is also this week, and Oracle, which is the other one. Oracle could have a big effect on where the Nasdaq goes forward. Always a big bit of news when Oracle announce their news. That could be quite volatile, knowing the past with Oracle, hence why I stay clear of that kind of stock at the moment. As I said, CPI news coming up this week. Wednesday, that's going to be quite another major bunch of numbers from the US. That will obviously move, again, the markets, I would have thought, in terms of inflation, where we're at with that. I did go through some of the numbers this morning, so again, refer back to that if you can this morning. I don't think we're expecting a huge move, but could be, obviously it could have an effect on in terms again of interest rates and where what the Feds do in terms of cutting more than twice, because I think at the moment the number is 2 interest cuts this year, but obviously things can move very quickly. There's PCE news, GDP news, that also is there. So again, have a look at that. We'll go into more of this obviously as we go towards Wednesday. And key themes, that's it. So inflationary rate, geopolitical news, sector performance, that's I think the 3 major key news to look out for this week. But the main takeaway is obviously the Middle East. So we'll see what comes out of that. Now, again, moving on to the next step very quickly. And this will just be a really briefly touch on defensive stocks at the moment as they stand. Obviously, I've looked at defensive stocks. Obviously, it's where people pile in on the back end of bad news or geopolitical situations, such as it is now. And as you will see, Walmart, Procter & Gamble, and Johnson & Johnson are all absolutely sky high. Now, the sector for defensive stock is normally around 20. It's currently at 24 times earnings. Some of them even more than that. Walmart is currently at 35 times earnings. Now, the correlation between what the company earned in terms of percentage, in terms of sales versus what it is quite different. Now, if you're looking at a tech stock with massive gross margins and net profit margins, especially gross margins I look at mostly, or just in terms of sales as well, if you understand if a P ratio is quite high for something like Microsoft or maybe even Amazon, you understand because their margins are so large. The margins are high in terms of P ratio for Walmart, but their margins are very small. So the correlation doesn't work out for me really in this. I'm not an expert. I'm not an accountant, but you can work these things out, you're looking at 1 to 5% growth in terms of sales for these companies, and they're at 35 times earnings. So it just shows you that people are not just piling in because of just the business, but piling in because it's just a defensive stock. And of course, what tends to happen is the herd immunity does come into it, which I've heard about this years ago, where people just buy into stock and then just move it up. So just to give you a quick example of what I'm talking about here. So if we go to Walmart here as a prime example apologies there, not Disney. Walmart here on a 1 day chart, so weekly chart, which gives you a really overall look at that curve. Look at where it's been historically to what it's at the moment. A 26 to $50. I keep saying pounds, apologies, but I am in London. Even at 90, I was looking at 90 this time last year on Walmart, and now it's currently at $123 a share. It is at a peak. It was almost actually at 135. So hence why, this curve is absolutely humongous, and you can go on. You could also add to this even Coca-Cola, which is also the other one that I would look at in terms of chart. Look at the Coca-Cola. I mean, it has come down a tad since then, but it was at a high of 82. So again, very high. Very, in terms of that side of it. So this is where we are at in terms of all of these stocks at the moment, and where we could be. But it does kind of obviously make things difficult if you're buying to defensive stock. I mean, I was looking at Waste Management as well a while back, 200. It's now 245. If you had bought into that, you probably would have made a tidy profit. My suggestion is you always should buy stock of defensive stock on your portfolio if you can, but not in those times when it's actually risk on more than risk off. So if you can have one on your stock, it's a low compounder, doesn't do much during that time, but obviously when things happen, it balances out your portfolio. So that could be an advice that I would give to anybody. But please do your own due diligence, obviously, and your own research. I'm only here as an advisory. I have, as I said, no background in finance. This is me self-taught and what I've learned over the last 11 years. But for sure, it's something you should look at. So these stocks tend to be overvalued. As you can see there, Walmart at 39 to 47 times earnings. Procter & Gamble, borderline still at 20 times earnings. Johnson & Johnson, I mean, I'm not sure if this is actually a complete update on the share price, but Johnson & Johnson is at £245 a share. It was at 165 when I looked at it last year. So that's how much it's changed. There was an issue with talcum powder at the time regarding cancer and what they had in those talcum powders, and I was actually waiting on that. But really, on hindsight, I probably should have bought in and just sat on it. They can, obviously, low compounders, obviously, but when things like that happen, like, in terms of defense stocks and people rotating out of AI software a few weeks ago now, it seems like a long time ago now, but, out of the software and the overvaluation of AI, everybody piled into, obviously, the money and liquidity goes into different sectors. It has to go somewhere, and it certainly did do that. And of course, with a compounding situation in the Middle East, that obviously has even more of a substance. So all I'm saying is please do look out in terms of where you should go in terms of stocks next. It seems like people are rotating back into AI stocks now again, looking at Adobe, Intuit, and Salesforce. So it's a bit like this really at the moment. It's all over the place, and I think that's down to obviously the background situation of what's going on in the world. So this is where we're at the moment. Lockheed, again, defensive stocks in terms of military defense is again at a very high P ratio, around 31 to 28. And again, a substantial amount of overvaluation. So, this is why I keep saying to you guys, when I look at my current situation, my current list, where MasterCard is 24% discount, Microsoft 29%, Uber at 50. These are the type of stocks at the moment that I would certainly be looking at myself. Again, I'm not, please do your own research, where I think there's more value there at this precise moment. I think that's a pretty good bargain basement on some, especially someone like Uber at 50% discount based on its intrinsic price. Even if you were reasonable in your calculation of the intrinsic price, you could still probably get it around the 40-30% mark if you're quite conservative in terms of where you think the discounted free cash flow is. So, yeah, I think that's pretty much it. I mean, Intuit there as well. And this is my current chart at the moment. I update on a regular basis, which we can keep an eye on. So that's pretty much it. I think, as I said, it's been pretty hands-off today, so no major news. I just wanted to give you a quick idea of, defense stocks and my analysis on it. Obviously, there is always some stocks that would be worth looking at, and that might be slightly still undervalued or in the ballpark of its sector. But a comparison of the sector and the P ratio and maybe a mixture of what the company does and their margins is definitely worth having a look at. So there we go. But listen, we'll be back tomorrow morning for another show in the morning, and a further pre-news. Let's hope that things in the Middle East may have stopped a little bit and calmed down a little bit. And I think crude oil is obviously something we should all be looking at in terms of guidance. And will it go above 100 again, or will it stay under? We shall see. I wish you all a very good night. It's game over for me now. I'm going to go and relax and chill out for a bit and have a bit of good food. And I hope you have enjoyed the show. Please comment below on anything that I've mentioned, any questions I need to answer, and subscribe and like, of course. It's always important. As I said, this show is cathartic for me in terms of recapping on the situation of the day. It helps when you trade on your own most of the day. But if people want to listen and, understand further, then all the better for me to join me on this journey. I'm quite enjoying doing this show at the moment. It's been fun to do for the last week, and may it go on. So on these wise words from the Trader 72, it's over now even. Can't even say it. It's been a long day. And please enjoy your evenings, and I will hopefully speak to you again first thing in the morning, or first thing or mid-morning pre-market bell in the US. Good night.